Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Martin Leinweber. He is the Digital Asset Product Strategist at MarketVector Indexes to discuss portfolio and crypto allocations for 2024. Martin, it is great to have you with us. Welcome to Trade Talks.
Yeah, hi. Thank you for having me.
You got it. Let's start with the macro first. How has the normalizing interest rate environment impacted correlations as it relates to crypto and the equity space?
I mean, overall, I would say the interest rate environment is super bullish for all risk assets. What is interesting in crypto specifically over the last weeks that it's completely uncorrelated to every major asset class. Yeah, whether you look at gold, oil, stocks, or even interest rates. So I think for crypto, it's generally speaking bullish to have a positive risk environment. I think we live in our own narrative at the moment. So it's just up and really unrelated to interest rates. I would say that's eye-catching.
Mm-hmm. And so we know that the sentiment is bullish, certainly as of November. What are you seeing in terms of flow? Where are people allocating money?
So interestingly, if you look at the exchange traded products worldwide, meaning the ETFs in ETNs you have also outside of the US, I mean, most of the flows over the last 3 months or so have been allocated to Bitcoin. Also, a substantial chunk to Solana, the new comeback chain, alternative layer 1 chain. And it's really a constant inflow, I would say, over the last 11 weeks. This week it was a little bit less. We had some slight outflows, but in the grand scheme of things, people are very heavily allocated towards Bitcoin, I think, because of this expectations of having this new spot Bitcoin ETF in January.
Why do you think that we're seeing crypto sector rotation from one ecosystem to the next?
I mean, the crypto market, generally speaking, is very narrative driven, and it's completely normal that during this bull market phases we have, that people chase one narrative after another. So it normally starts with Bitcoin, but what you see is we had a strong rally in Solana. We had a strong rally in the Solana ecosystem token. Suddenly people are chasing Avalanche ecosystem or the Cosmos ecosystem. And you also see it with the meme coins. After this huge bonk rally we had on Solana, people are just searching for other meme coins on other chains. And that's completely normal that you have this sector rotation. You also have that in stocks, but in crypto, it's really within weeks or so where you see it, not within months.
So if you're under the perception that the 60-40 portfolio doesn't work anymore as investors are looking for new ways to diversify, how much would you recommend in percentage terms of allocating a portion of your assets to the crypto space?
I mean, if you're not really a crypto degen and you want to start with a Bitcoin allocation, and maybe you can do it next year in January with the spot Bitcoin ETF, I really would start small. And what you see is that a really small allocation can reduce your risk. So we're talking about 1%. And I think everything between 1 and 4% is beneficial if you hold it long term. Beneficial in terms of ratios, for example, the risk-adjusted return, and also you don't recognize it necessarily in the drawdowns. So I would always start small, between 1 and 4%.
All right, Martin, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much.